Hey there, team. Happy Monday. It is me, Sean Richard with Gateway Mortgage Group. Hope you're having an incredible start to your week and that you had a fantastic weekend. Wanted to come at you with another market update. So let's head right in. The big news coming at the end of last week was a poor 30-year bond auction. It caused a downward, a downward spike in mortgage bonds, which ticked interest rates up a little bit. This is on the heels of the previous Friday getting a much better than expected jobs report. So we've had two big stumbling blocks on our road to better interest rates. Now, we do know at the end of the month, the Fed is planning to cut the Fed funds rate. They came out and they've emphasized that is going to be the case. The stock market is typically like that. We're actually down a little bit in the S&P 500 today. However, the mortgage bond market is up about 3. It's been up as much as about 6 today. We're just under the 25-day moving average. So that's what we're fighting to break through after we've fallen below that from Friday. So we'll look to see if that happens over the course of this week. Unfortunately, because we're right at that ceiling, there's a lot of room to the downside for mortgage bonds, which means an increase in prices. Just as a reminder, mortgage bonds and interest rates move in opposite directions. They have an inverse relationship. So as mortgage bonds go down in price, more interest rates go up. The 10-year Treasury, although not a complete direct indicator of mortgage rates, typically moves in the same direction as interest rates. So if the 10-year Treasury is up, interest rates tend to be up. And if the 10-year Treasury is down, interest rates tend to be down. So those are two of the big things that I keep an eye on to see what our trends are. So take a look at the charts in the Twitter link above. And then if you have any questions, don't hesitate to leave them down below. This week, we've got Jerome Powell speaking tomorrow. So that always has the ability to influence markets. We'll see what he comes out and says. Probably just going to be reiterating the emphasis on a Fed funds rate cut on the 31st of this month. So we'll see if there's any other nuggets of information in his talk. And then we're right in the middle of Q2 earnings season. So all of the earnings that are going to be coming out in this week and the coming weeks are going to have an impact on pricing as well, have an impact on the stock market. So we'll look to those numbers to see where we head, and more so in the stock market. But obviously, that when people are taking money and putting it into the stock market, chances are that's at the drawback of the bond market. Typically, people are taking money out of the bond market, which includes mortgage bonds, and putting it into the stock market. So we'll see how that all shakes out towards the end of this week. Have an amazing week, and if you need anything, don't hesitate to reach out, 817-380-8148. Take care. Bye.